Yo. Yeah, hey, good morning, 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 good morning. Sorry, I'm a little tardy. I had to make my coffee. Forgot my coffee. Yeah, my whole day's screwed up. I got 9 hours of sleep. Yeah. Weird. Hang on. I got to get things out of the way. That's out of the way. I got to move this over here. No, that's too big. Hang on. Hang on. Discombobulated. There we go. Good morning. Welcome to Forex.Today, the YouTube community of 20,000 foreign exchange traders. I see you and you and you and you and you and you. Good morning. Good morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I've been doing this gig for about 20 years or so. Learned a lot of things, a lot of water under the bridge, so let me know how it can help. I'm here to share. In fact, I consider myself a servant in our relationship, so you're the boss. Let me know how it can help. Ask questions in the chat. I will do my best to address them. Sometimes I don't see them because somebody asks one question. I speak for 20 minutes. I don't look at the chat for 20 minutes and I come back and then there's another question. So if I don't get it, if I don't address your question today, why don't you consider being a subscriber and you can come to tomorrow's lecture or Monday or Tuesday or Wednesday or Thursday of next week or Friday of next week even. And maybe one of those days I finally see your question. So get involved is all I'm saying. In the description below the video, there's links to lots of resources that may also benefit you. I wrote a book many years ago, Strategic and Tactical Forex Trading. It's all right. It's all right. It's pretty good. In the description below, you'll see a link to free training videos. You'll see a link to paid training videos, fxbootcamp.com, for example. It's $88 a year, not a month, a year. And you get 65,000 hours. No, okay, 65 hours of training videos. Day trading, swing trading, macroeconomics, monetary policy of central banks, trader psychology, technical analysis. It's all there, man. It's all there. If you have a burning question, FX Bootcamp is the ointment. Okay, but if you don't have $88 or you don't trust me because you think I'm going to use that to get my yellow Lamborghini and that just pisses you off, I can't help you. Sorry, you got a lot of baggage, man. Also in the description below is a link to an ethical, trustworthy foreign exchange brokerage. Pretty much the only one I know. That's a link to tradersway.com. They want to develop a symbiotic relationship with you. Instead of booking you and trading against you like many unscrupulous foreign exchange brokers, it seems that they're in it to win it with you. They want you to succeed. Because then you'll trade more and you'll trade for longer. You'll trade for years and years and years, not a couple of weeks, blow up your account and disappear. So it's just a better business model. Maybe it has nothing to do with ethics. Maybe it's just a better business model. They're like, you know what? We hope our traders succeed so that they trade every day for years and years and years and years. I'm like, well, that makes sense to me. So they earned my loyalty and respect many years ago through their actions, not promises, not advertisements, through their actions. If you open up a demo account, maybe they will earn your loyalty and respect. So that's tradersway.com. Claybo says, hey, Wayne, your macro teachings have taught me to be patient and wait for the opportunity. You've been on the tear the last month after completing boot camp. Highly recommended. Awesome, Claybo. Thumbs up. Awesome. You know what the most, honestly, if you just got to where I was at year 5 of my trading, just imagine you just jumped ahead 5 years. maybe 8 years you just saved. I mean, oh my God, right? That's what really matters. The money's money, whatever. Money's money. But if that just saved you 8 years of trying to figure it out, then that $88 is well spent, is all I'm saying. It's 8 years is probably worth $11 a year, huh? Usman asks a question that always gets the same response. He says, do I think gold will blah, 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 blah? I don't think. I only do analysis. Okay? So it's like, well, you tell me why gold should go up or down. And if you know the why, then you can tell me, is there anything in place to change the why? Is the why going to change today or tomorrow or next week? And then you get your answer. Okay? So I look at this and I say, central banks around the world have deflationary policies. Gold comes down. Is that going to change today or tomorrow or the next day? I don't know. You need to figure that out. Okay, what I said on Sunday or Monday was sell high. So here we are on Thursday. We're near the end of the week. It's, we hit support and bounced. Your next question, right, which is a better question, is like, do I think? Who cares what I think? What does the chart say? What do the fundamentals say? Trading should be factual, not opinionated. Okay? So technical analysis would say if you're a bear, that's what you're probably going to try today/tomorrow. Okay? Now you're like, Wayne, you're being unfair. I asked the question and I put think, but that's not what I meant. English is my second language, so how dare you yell at me for using the wrong words? Well, as a coach, I have to be particular, especially when we're communicating. So if I jump on a word, it shows the importance of that word, but also I just explain the thought process behind why I would pick on a word like think. Okay? Or what do I think? Who cares what I think? Who cares about the idiot on TV? Okay? What everybody else thinks is worthless and irrelevant. I don't want to know what other people think. Okay? So again, I'm harping on that problem. And now you will, right? You will get my point and you'll probably change the language, but more importantly, you'll change the way you think about a trade as well, right? Maybe. Or maybe we're both hopeless and doomed. Maybe. So it's more like, what's your bias? Is anything going to change your bias? And what do the charts say about possible entries? Look how complicated it is. You ready? Sell it off the 21. Why? Well, I'm fundamentally a bear. Why? Central banks around the world have a deflationary policy. Why? That strengthens the dollar and weakens demand for everything, what we call aggregate demand. Is that going to change today or tomorrow or next week? No, probably not. You see? That's where I want you to get. So the question should be, your question about gold should be, there's a double bottom. Is it still valid to sell off of the 4-hour 21? That's the right kind of question. What do I think? Okay. Again, don't ask a question like that. But more like, give me a strategic or tactical type question. Should I be worried about a double bottom? Yes, it's a double bottom. Is it too late to sell off the 4-hour 21? No, it's not. Do you think the monthly pivot, the daily pivot, or the weekly pivot, as they're all clustered around a role reversal, could act as resistance? Yes. Yes, I do. I do. I do. I don't know what to do. Okay. See what I'm getting at? So I know I'm being a bitch. Look, I got 9 hours of sleep. I don't know what it means. It's weird. Okay. Freaks me out. I went from a good guy to a bad guy. Bad cop today, everybody. Bad cop. Okay. Look. Role reversal. 4 hour 21. Monthly pivot. That's supposed to be a straight line. Let's see if I can redo that. I'll actually use a line drawing tool. Okay. Monthly pivot. Weekly pivot. Daily pivot. Okay. So if I'm a bear, should I be worried about this area down here? Yes. But as a bear, can I sell all that? Yes. And then you might say, well, Wayne, I don't use the 4 hour chart. And I'm like, okay. Okay. I don't know. It's just like, you didn't notice any of that, then that might be your problem. Right. Would it be rude to say, now would be the time to search for a bankruptcy attorney? No, that would be rude. All right, I don't mean to be rude. Yes, actually, Darko, yes. I found I was quite exhausted yesterday. So, I decided to get some sleep. Yeah. Justin's like, you're so funny. Well, again, putting the jokes aside, why do I tell so many stories? Well, why do I tell so many jokes? Because you might remember the joke more than you remember the lesson. And then you attach the lesson to the joke. Or you attach the lesson to the story and you file the story in your brain. Okay, it's called anchoring. And it's part of neuro-linguistic programming. So I'm trying my best to get you to remember, because I know you'll hear close to 100% of what I say, but you'll remember less than 1% of it tomorrow. So today doesn't even exist. If you don't remember 99% of what I say, then it never happened. And so you might remember something like I used analogy the other day about a general on his high horse. Notice I didn't say a general on his horse. On his high horse. What color was the horse? White. Okay? And he's 1,000,000 miles away from the actual battle. He's watching. And then he turns to his lackey, his minion, and complains there's too much cream in his tea on the battlefield. And he yells at the minion to make him feel bad. Well, that's a lot of detail. A general on his high horse, white high horse, watching a battle, and he turns to his minion and yells at him, too much cream in my tea. Okay? And it's that had to do with trading inside of a range. I'm like, I don't want that battle. In fact, I wouldn't even send my troops into a battle like that. So in that story I gave, as a general watching the battle from afar, I sent in my conscripts. Send them in. I'm not going to put my troops in there. And it was a lesson about trading inside of a range and the danger of it. I'd rather find the high ground and command that. So once again, I could just say don't trade in the middle of a range and you'll hear me, and then 3 days later, that conversation would have died. It's gone. Everybody would have forgotten about it. So it never happened. Okay, so anyways. Anywho, So that gold's still doing its thing. We can do Bitcoin here. Bitcoin's still not up. The mayor says that some might not see the range. Yeah, and they will die. That's natural selection. If you can't see it, you're going to get killed. You step in front of a moving bus, you die. Oh, but it's not fair. I have weak peripheral vision. Well, if the bus doesn't run you over, the wolf is going to get you. Okay, I can't do anything about that. But it does happen for sure. Okay? Right on, Justin. All right, cool. So anyways, Bitcoin, look, that's a 4 hour. We'll drop into a 1 hour. Okay. Is it going up? No. See if I can get my stop even closer. Nice. Cut my risk in half. So anyway, so what's going on here? Hey, Wayne, do you think it's going to... I don't think, bro. Okay. Thinking's for analysts. I've already done my thinking weeks ago. You see what I mean? As a trader, there's no thought. I already did the thinking weeks ago, weeks and weeks and weeks ago. And I'll give you an example of that. Okay. Weeks ago, we said, based on what's not even on this chart, I don't need this chart at all. And we get to the conclusion of down. Okay, that's supposed to be an N. Okay, down. Nothing on this chart. I mean, you could use the chart and get the same conclusion. But I think way more important is without this chart, before I even open the chart, I'm going to drop it like it's hot. Hot potato down. So then I open up my chart and I go, okay, done. Great. Okay, good. So I know how to trade a range from a bearish point of view. Every time it gets to the top of the range, sell it. The other thing I know how to do is position trade. Okay. So there's two ways to break down this position trade. You use this as your top, or you use this as your top. So we'll call this top 1, top 2. And we will, okay, based on that thought, remember, we're still thinking now. Okay, 1 leads to 1. 2 leads to, oh, I didn't even fit it in there. Let me do it again. Hang on. There we go. Okay, 1 leads to 1. 2 leads to 2. Okay, now I'm done thinking. Done. Was that right, Luis? Wow. Too bad. It's probably the right decision, just incredibly poor timing. Interesting. Well, that's pretty cool. I mean, seriously, you get to put that on your LinkedIn profile. I was the Prime Minister of the UK for 2 weeks. It was cool. You know what sucks is you probably ordered like knickknacks to put on in your new office, and they haven't even shown up yet. Anywho, right? So there we go. That's how I think about it. So now it's just technical analysis. That's easy. Okay. You know why it's easy? There's really, when you boil down to it, there's only one thing you need to do at this point. And I don't care how you get to the conclusion. I use certain moving averages. You can use different moving averages or no moving averages. You could use Elliott Wave, and I don't use Elliott Wave. You can use Fibonacci or not use Fibonacci. I don't really care. It's all the same. Honestly, kick down the door, put ammunition into the bad guys. Don't kill the good guys. That's it. In this case, I don't really care what you do from now. There's only one thing to do. Use any tool you want to help you. Oscillators, no oscillators. Don't care. It's all irrelevant at this point. You just need to make a decision. The one thing you do at this point on this trade is sell lower highs. How you analyze and make a decision of a lower high is up to you. There could be 25 traders doing the same thing using completely different tools and probably get similar results. And some idiot would buy it. Well, I don't really care. Now, you can say, well, it might go up from here, Wayne, at 19,000. Yeah, it might, but I'm a bear, so that's irrelevant to me. Who cares? It's when you're sitting there going, oh, it might do this, or oh, it might do that. Dude, you are not in control. Okay? Snoop Dogg has a saying for that, for the kind of person that, I don't know, thinks that way. But I can't repeat it publicly because it's potty mouth. But anyways, okay? Be independent. Have an independent thought. Don't let the market think for you. Don't let your MACD tell you what to do. Okay? You're either a bear here or you're a bull, and you should have serious rules of engagement. And for me, that's what I think. If you were going to ask me, what do I think? But you knew that a week and a half ago. It's like, that's why a lot of these questions are silly. You're like, what do you mean? What do I think? I'm well beyond thinking. Okay. Anyways, you guys want to talk about the pound. Okay, let's do the pound. Okay. Well, there you go. Doesn't look like, okay, now let's go to a smaller time frame. And there's that. Okay. See, I look at this market, I see mostly neutrality. One thing I hope you carry away from all these, hours that we spend together is that I don't freak out. And I don't freak out because I know from experience I don't have to chase price. Right, Barry? Oh, it might go this way, and then it might do that. It's like, oh my God. Darko says it's too challenging for Liz. You know what? I mean, again, I don't know a lot. I don't live in the UK, so I don't sit at dinner time and watch BBC and get the hourly update of what's going on. But I don't think the economic policies are wrong. I think the timing was incredibly poor, and the launch was incredibly poor. So economically probably sound, but politically they blew it and blew it bad. But I kind of think that somebody outplayed them politically and set them up for failure and set her up for failure. And so I think that many of the economic policies I did hear about, allowing for fracking, lowering taxes, that's good. It's good. All stuff like that. That's good. Those are good policies. Not when the central bank is doing the opposite. Like not in this situation. In the long run, it makes a lot of sense. But in the short run, they jumped in front of a steamroller and then laid on the ground and waited 2 weeks. Okay? Loaded like a freight train, lying like it never came, feeling like a space brain one more time tonight. Yeah. Anyways, run over by the night train. Hey, I used to be prime minister once. It's a tough gig. Clunk, clunk, clunk. Okay, anywho. Oh, I don't know what you're talking about, Zach, so that's interesting. I guess I'll have to Google that. Amoro says, hey, pips and profits is your SDC. Is your SD? What? Rephrase your question. SDC. Why am I not? It's not clicking SDC. But what is something set to measure 55 candles? What are you talking about? Are you talking about my price action pivots? Are you talking about whoa? We'll get there. Whoa, as they say in Manchester. Whoa. Oops. Loaded like a freight train. Thank you. You're a great service. Oh, hey, my pleasure. Ask your question again, though. Oh, the standard deviation channel. Thank you. Wow. Really? So somebody else must use these channels a lot. Is that from some other guru? Oh, just drop an SDC on 55. And you're like, whoa. Interesting. Yeah, interesting. Never heard that before. So, let me break this down to try to figure out what you're thinking. Okay, if you're using standard deviation, a standard tool like this, you're not probably counting the candles. You're just looking at the top of the trend to the low end of the trend. So you must be talking about my price action pivot points, right? As the indicator. So as my indicator, price action pivot points, I change it all the time. Depending on what I'm measuring, I'm like, give me more, give me less. So I can change that to 55, for example. And I think that is the default setting. But let me be clear, it's not a standard deviation channel. It partially is. Part of the math that I created for that is standard deviation. Okay? But it's not completely standard deviation. So again, here's standard deviation. So if I measure from the top to the bottom, you get that. And you see, now you might say the next one is 2 standard deviations from the mean, covering, one standard deviation is 95 and 2 standard deviations is 97, I think. If I remember the math right, is that right? 95 and 90. Anyways, you can see when I draw a standard deviation channel, that's part of it, but it's not the complete, right? So the other thing I do is linear regression, and there you get kind of like that. Okay. And of course, I'm tweaking the math a little bit inside of that, but I'm trying to get it to mimic, instead of measuring market. So the way we get the pivot points, of course, is you measure from the open to the close. Okay. Why do we care about the close? The central pivot point is a weighted mean. Okay. The other thing that we care about is the high and the low. So that gives you sentiment of the market generally, or no, I guess sentiment isn't the right word. We'll call it direction. We opened here. There was a small high and a huge low. So that goes into the math. And really, it's the range that we're looking at here to say, well, if something similar happens in the next period, and of course, this is unusual, so your pivots become almost useless. But in the math, what's going on here is it says, okay, a few things, right? One part of it is we're here and we're here. Okay. The other thing is that's the high, that's the low. And then, of course, the weighted mean, the other part of the math is the fact that we closed here. Okay. That last one is sentiment because it's a weighted mean. So from there, it says, okay, if we've had a range of this high, then this is our support pivot. And this is our resistance pivot. And you're like, oh, well, that makes sense. You can see a lot of the math is just based on this high, this low. So we call this support, and we call this resistance. Now, maybe you don't see it in a normal month because they're much closer and all that kind of stuff. But now with the extreme, you can see how September impacted October, right? You're like, well, it looks like the top is projected to be resistance and the bottom is projected to be support. I know, right? This is why you need to know your indicator, because sometimes these indicators seem like magic. And then when you actually start doing the math, you're like, oh my God, it's elementary. You're like, that's it? That's all it's doing? Yeah! Yeah, it's predicting a range. Okay? That there's a range. But then the other is what we care about is the open close. And in particular, the close is worth more in the math than the open. So we closed lower than the open, so the central pivot drops. Okay? Right? The central pivot drops from here to here. Okay? Right? So it says, if this continues to be bearish, okay, then when you do the math, you're like, okay, the distance from the central pivot to the resistance and the central pivot to the support, they're not necessarily the same because of the weight in the mean. Remember, what the weighted mean is trying to incorporate is the ending sentiment. Okay, the ending sentiment of how the previous market closed. If we hit a low like this and then ended up here, the central pivot wouldn't have moved much. But because we ended here, okay, the central pivot ends up being there. If we had closed here, the central pivot probably would have been closer to there. So did we end the month as bearish as it was at the lowest part of the month? No, but it's still bearish. Okay. Now, how do you use this information? Well, what is the math telling you? Okay. This math that moved us from here to here could be interpreted by your human brain as bearish. Now, in some context, that's correct. In other context, it's wrong. So you're going to have to make a decision. There's more to it than that. Could be seasonality, could be market conditions, could be a change in central banking policy that happens today, and maybe something today drives this up. Well, that could always happen. Some of that's black swan, some of that's your freaking job. That's why you don't worry about it. You just do your job. Okay? So you could interpret this data as saying, well, based on what occurred last month, we'll call that high and low, and where we ended, so that's current sentiment of the new month, you might want to be a bear on this pair. Do you understand that point? That you could interpret it that. Let's say you just don't know nothing about nothing except this. All you know is technical analysis. Then you could extrapolate all this data and say, well, with the falling central pivot, it seems to indicate that there's bearishness in the previous period, and that if I'm a trend trader, that there could be a continuation of said bearishness. So you have to read my book. How many people here have read my book? Published in 2008, written in 2007. Okay. Apparently, everyone with a name that starts with J. And I really appreciated that Johnny, Jim, and Jean-Guy were the first ones to respond in milliseconds. These guys are my brothers in arms. I feel like if we were getting a street fight, I'm going to call Johnny, Jim, and Jean-Guy and hey, man, some shit's going to go down and I need you to back me up. They're like, yep, they're there. Jean-Guy's already got a tire iron in his hand. Yep, I'm ready to go. Nobody even needs to ask why. So anyways, thank you guys. Yeah. So, cool. So, here we are. In that book, think about this. So, I'm not just kind of making this up to fit the model, so to speak. What does the book say? I mean, how many years ago is that? Are we talking about 17 years ago, 18 years ago I wrote that book? Okay. Remember, it's the worst book ever written, according to one of the reviews. And by the way, if you did buy the book on Amazon, would you please leave a review? I'd appreciate that. Even if you don't like it, that's fine by me. But ideally, it would be a 5-star review. But whatever. If you could, because I'm going to write another book. So just like to know if the first one was worth it. I have carpal tunnel syndrome from the first one. So it's going to be a real challenge to keep writing. But anyways, that'd be cool if you could write that. Because maybe, I don't know, see, I'm hoping that maybe somehow that makes the Amazon algorithm work for us, for me in the future. But my last book was $88 when it came out. I want to try to get that book, to the $20 to $25 level. Okay. No, Kyle, it's professionally done by Wiley Publishing. Okay. Okay. Yeah, you got a bootleg version, but see if you can get an Amazon review on there. Okay. But yeah, okay. So anyways, going back to right? Snap back to reality. Oh, there goes gravity. Okay. That in everything that I just described, this whole thing dropped and we closed here. There's the high, there's the open, there's the low. Okay? When you do the math, Okay, in the book I wrote in 2007, published in 2008, it said, based on that math, you want to sell at this price, 114.52. That's it. That just happens to be the high of October. Now, I don't know if this is going to fall further. There's a lot going on in this stuff. Holy smokes, that is incredibly unusual in that range. And because of that, we have these crazy pivots that are way, way unusual, ridiculously spread out, because this was something that only happens every 100 years. That's your 1,000-year flood. Okay, great. Despite all that, the book says you're probably a bear and you want to sell at that price. Done. It don't matter none. So you might be managing this. You might have a stop at break even or near break even. So your entry's here, your stop is here, and you don't like the fact that we're all the way back here. Okay, so, and we didn't get down to even the M2, and you're worried that it's going to go up. But look, why worry? You're not going to lose money. Okay? Because you by now your stop is pretty close to break even. So, look, if you lose 20 pips, I wouldn't call that money. Okay? You got an opportunity. So what all of this is trying to add up to is that if this continues back down, then we're going to head down to here. Now, really what's probably going to happen is we're going to get caught in some sort of consolidation as we figure out what's next for the UK. And meanwhile, these pivots over here are calculating. You understand? They're calculating November. And it's too early to get on your November trade, but just notice that the range is going to be much, much, much different than what the range is now. Irregardless, if you were a position trader, okay, you're below the most important predictive price. You don't know the future, but you're at break even, so praying never hurts. Is that right, El Moro? Yeah, there's quite a few like spelling mistakes and some other stuff in there, but I felt the publisher did a poor job, and so I probably won't use them again. And I didn't know that was my first book, so when I talked to them, I was just excited, like a real book publisher was going to publish my book. It made me legitimate. I mean, I don't have regrets doing it. I spent, how much did I spend? 50 grand on the party. I spent $50,000 on a party. I hope you guys were there, by the way. What a party it was. Oh my God. So, I spent more money on the party than I made in the book. But having learned, one question I didn't ask is, what price are you going to sell the book? Because I want to write a book to share my knowledge. And it never occurred to me that they would sell it for like almost $100. Like, for a book? Holy crap. Are you kidding me? Right? So anyways, if I have to go my own way, go my own way. Go your own way, right? Then I want to like bring it down to a reasonable price, right? Because money's not the point. So if my math is correct, I don't know, what is it, $10 to publish a book or to print a book? And it's pretty high actually, like $5 for shipping, $6 for shipping. That gets me to about $15. Then if I reverse engineer this, if I make it a $25 book, Amazon requires that I drop it by 30% so that they can show, that it's cheap on Amazon. I think it's just a requirement. So if I price it at 25, that puts it at about 17 or 18 bucks. And that would cover my cost of shipping. That would cover my cost of printing the book. And so I make no money. So that's my thought process anyways. All right, cool. So that's how to plan. That's how to read a chart. That's how we just covered pivot points. But to me, it's much more than that. It's just like, I don't know. To me, it's just doing the job. And now we don't know the future, but you know what your intent is. I would read this and say, my plan for October is this. Is that going to work out? How the hell would I know? I can't predict the future, but I know what my intent is. Okay? And if I can put that into a book 17 years ago, and now we're looking at something from 17 days ago, and you're like, oh, snap. It worked perfectly. Then there's some universal truth going on here, right? Or enough people have learned my style of trading. I've taught enough people, right? That now it's become the written word. I don't know. All right, so what pair do you want to do next? Okay. By the way, do you like my price action pivot points? Okay. Drop it like it's hot. Drop it like it's hot. Drop it like it's hot. Huh? Aye? Goed? Goed, as they say in Holland. Huh? Yeah. What's today's target? Today's target is, look at this. Hey, you're like, that's the daily pivot. Look, bearish profit target conservative, bearish profit target aggressive. Okay. From the top of the range to the bottom of the range. It's great. Isn't that nice? Do I trade indices and futures as well? Sure, Claybo. Yeah, Matrix. Well, but like for example, on Sunday, in my day trading group, we were here, and I said I'm not really interested because I feel like we're in the middle of a range. But if we hit this on a Tuesday, that would be a sell. Okay. So now it's like, can we maintain the downward momentum of that's the sell, okay? And now are we going to do this? Okay? Yeah, that's, look, if we break here, that's probably going to be a retest. We're going to fall to here. I'm not just randomly drawing these things. Okay? The macro has spoken. Yeah. I haven't used RSI in a long time. Probably have it here. Okay. I haven't used this in a long time. I mean, in 15 or 20 years. There was a period back in the early days, I used 3 different RSIs overlapping each other. So I had one indicator with 3 different RSI settings. And I was trying to find a scenario in which they were all oversold or all overbought, and was trying to use them that way. And it was about a period in time in which I realized I was trying to find a way for the indicator to tell me what to do. And I tried. Think again, like imagine if all RSIs were, bearish, it was time to buy. It would be like, only in that situation would I buy, because the indicators on 3 different time frames. See, like I was trying to outsmart the market. I was trying to beat the market. I was trying to find a way to have an indicator to tell me what to do. And after trying that for a long time, I had an epiphany that I was trying to find the wrong thing. So at that point, I ditched RSI because I was also testing stochastics. It probably has it here too, right? There you go. That's my setting. I don't even know what the standard setting is anymore. But anyways, so this is how I tweaked it, but I don't even know the standard setting for an RSI. But anyways, how I got to these custom settings for RSI was I did the opposite of what I was trying to do at the time with RSI. I took RSI versus RSI versus RSI, trying to find a way to figure out, what the market wanted to do. That's a form of like outsmarting it. Okay. The way I got to this indicator was the opposite train of thought. And instead I said, I want the indicator to tell me when to do what I want to do. Versus using RSI was supposed to tell me what to do and when to do it. Okay, this was telling me what to do, and this was telling me when to do. And that was a big turning point in my career. That's the day I took control. So I asked myself, and again, I don't even recall what a standard stochastic setting is. It's so long ago. I changed them to 835, because I'm sitting there and I had already spent a million years, testing every moving average under the planet, under the sun. I tested everything. So I got that perfected. Okay. So then when I get to the stochastics, I said, well, if I want the stochastics to tell me when to do what I want to do, well, what is it that I'm trying to capture? Okay. And it had to do with candlesticks on small time frames. Okay. I want to find the periods in which price is overbought in a falling market. Sell, sell, sell. But I already knew I was a seller. When should I sell? When it's overbought. And again, the only time you get a rollover on stochastics is when price is no longer making a higher high, but instead making lower lows. So it's like the way to get stochastics up are the candles are making higher highs and not lower lows. Well, I don't want to sell in a market like that. When price is doing that. The market already dictates I'm a bear, so I already know I want to be a bear. So stochastics then tells me that it's no longer making higher highs, so that's stopped, but it is starting to make lower lows again. Sell. But I already knew I was going to be a seller. Stochastics doesn't tell me to buy or sell. It just tells me when to buy and sell, and I've already made the decision to buy or sell. I was asking significantly different questions from my oscillators. I'm the one that made the decision, not the RSI. So after trying for a very long time, I started asking the right questions. And I got rid of relative strength. I wasn't interested. Okay. So you could, I'll put vertical lines. It's right here. Pachow. Put a vertical line here. Pachow. Put a vertical line. I guess it's going to be here. That one's not perfect. Dang it. Okay, that one's not perfect, but very tradable. So, okay, when you sell, you put your stop above the previous high. We can't see the previous high, so, right? This one you sell, so your stop is above this high. Okay, this sell, your stop is above this high. Okay, and we haven't had a sell yet. Why? It's not overbought. So you would have been short since the middle of August. And since we're consolidating, you might have taken profit. And you might say, oh my God, Wayne, you mean sell in March, sell in May, sell in August? You're like, that's easy. Uh-huh. Well, I guess you should have bought my book, even if it's ridiculously expensive. Thank you, Richard. But remember, it's the math that I'm concerned with. The math of the stochastics is telling you whether the last few candles in the period, so you have to decide, well, how many candles do you want to measure? Okay. How many are the candles making higher highs relative to the previous candles and higher lows in regards to the previous candles? Or are they making lower lows and lower highs, right? It's just that. That's all it's doing. And that's only helpful in the context of whether you want to be a bull or a bear. So right now, look at the math. The math. Okay. Is it making lower lows? No. Is it making higher highs? Yes. Relative to the last few candles. Okay. So you might only be looking at the last few candles, right? And you could say, well, we were way inside this little range. You mean, okay, look where the consolidation started. Okay. Okay. Then it made a higher high right here and a higher low. No higher high, but a higher low. Now we're trying for a higher high. Okay. And once again, relative to the old candles, still a higher low. So at the very least, we're making higher lows and possibly higher highs. So this would be not an ideal scenario. Now, let's say this started to roll over today, where suddenly no higher high. So let's say this comes back down and closes as another sort of spinning top red candle type scenario. Then this would pull up because, right, no higher high. Okay. And then if we had another sort of down day, once again, not a higher high. So it would come up here. And then if it ever made a lower low and then a lower high, it would do one of these things. Okay. So it starts with no higher high, but a higher low. No higher high, but another higher low. And then suddenly no higher high, but a lower low. Then it would roll over and it would show weakness in the upward move. And if I'm already a bear, I would drop it like it's hot. And all of a sudden you realize, oh, I don't give a crap about stochastics. It's just helping you see what sometimes is difficult to see. What are the last 8 candles doing relative to my strategic plan? It's a tactical analysis of a strategic plan. And all of a sudden it's like, hey, Wayne, I got a new complaint. No, it says, hey, Wayne, it's no longer making higher highs. And in fact, now it's starting to print a higher low. Engage the enemy. There's weakness. Engage. They're weak. Okay. Was I a trader in the 80s? No, but I liked G.I. Joe. I had G.I. Joe comic books, collectibles. Never got number 1, but I think I had number 3 G.I. Joe comic book. I think I had number 3, number 5 and 6 and 8 and 9 and 10, I think, if I recall. I think my first investment was Apple Computer, and it was like 1993 maybe. I worked for them in 1995, no, I worked at Cisco in 95. No, that's not right. No, I worked at Apple in 95. Yeah. So anyways, yeah, G.I. Joe was killer. So yeah, no, I ain't that old. But thank you. Like a virgin. Okay. Like a virgin. All right, so check it out, man. Dollar weakness across the board. What do you think? Stock market rally today? Some more good news? Yeah, actually, you know what? The 90s were pretty cool. I had a really, really amazing 90s. I tell this story somewhere, and it might be in Blue Sky. It's really, truly an amazing story. I'm in this tiny, 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 tiny town in northern Saskatchewan. It's poor as all hell. And I take people on, I show them the spot using Google Earth where I stood. And I said, I got to get out of this 2-bit town. You understand, like, at least from my point of view, this actually really happened. This is a real story from a real human being. I'm standing on a spot in about 1988, 1989. I think it's 1989. And I said, I need to do whatever it takes to get out of this town. I want to see the world. I want to be a businessman. I got to get out of here. Okay? 5 years later, I own my first suit. I'm taking a subway in New York City. Hey, remember, 5 years earlier, I was in this tiny town in northern Saskatchewan. I'm wearing a gray, what do you call the suit that goes overlaps? That's the only time I didn't like it, but a gray suit. Okay. I got a trench coat. I have a briefcase with a laptop computer. This is 1995 now. Double-breasted. Thank you. I got a double-breasted gray suit. Got from Sears. Okay. I'm on my way to a board meeting on Wall Street. I'm elected to the board of directors. And again, you've heard it 1,000 times, but just put it into context. George Soros is on the board. The vice president of General Electric. The president of AT&T. The vice president, Arthur Anderson. A representative from the United Nations. And they elect me to the board of directors. In 5 years, I was a kid. I'm a high school student standing on a spot in a dump of a town in the absolute middle of nowhere. 5 years later, that's what happened. True story. Absolutely, totally ridiculous. No one would believe such a story, but it happened. Okay. So, do you think that influences the way that I see the world and what power that you can possess? Okay. So I would translate that to you. I think if in that moment, standing at that gas station in rural Saskatchewan, and if I had said to myself, I want to go to New York City I want to go to a meeting on Wall Street at a high-powered legal firm. And I want to sit on a board of directors with some of the most powerful Fortune 500 CEOs or presidents or VPs and stuff in the world. It would sound totally ridiculous, especially when you're like 18 or 19 or whatever I was, right? Now, I might have been younger than that, 16. Can you imagine being 16 and saying, yeah, that's what I want. I want to leave this town. I want to go to another country, and I want to be considered an equal to a Fortune 500 senior executive. Would have sounded stupid. So my point is, you can get this Forex thing together if you work hard enough. I'm telling you, you can get this down. But you wouldn't believe right now what you'll become. Do you understand? You can't even imagine your future self. You can't even imagine. It would sound stupid. If somebody told you what you'll be, and maybe in as little as 5 years. Now, Forex is a tough gig. It might take you 15 years. It might take you 20 years. Doesn't matter. But you can't imagine what you will become. You're incapable. It's impossible. So all I can say is fight for it, work harder, work more, do more, and enjoy it the whole way. Enjoy it the whole way. Have fun being the best there ever was in trading Forex. Pete says after 44 days? It's interesting, huh? Yeah, Lucas. Yeah, that's not uncommon. You'll get it. You'll get it together. So pound a little bit weak versus Kiwi. Pound not weak versus CAD. Pound not weak versus daily. I guess there's a relief. A relief that they got rid of their prime minister? Okay. Pound is weak versus Aussie. So I find it very interesting that US dollar's weak, but somehow relative to pound, Kiwi and Aussie are actually a bit strong, which is, interesting. But the sudden weakness in US dollar is going to probably kill my Bitcoin trade. That's fine. I'm okay. I won't lose money. Richard says, help me conquer my time. I run a business, raise kids. Okay. Well, I ran a business, traded, raised my kids. I think I was a half decent husband. And at the same time, a full-time Harvard student for 5 years, including living on campus every single summer for a month. Is it easy? No. Is it doable? Yes. Okay? You just have to be amazing. Simple requirement. You just have to be able to do what other people can't do. Harvard has canceled that program. So the program, I was in a cohort, the first cohort to go through this program for senior executives. And they very, very quickly adjusted it after the first year. And then by the third year, they just canceled it altogether. Now they have some completely different version of the program. The reason they canceled it is it was way, 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 way too difficult. It's impossible to run a small business, to have children, to be a Forex trader, to be a spouse, and to be a full-time Harvard student. It was declared impossible. Less like 99% of people that applied for the program were rejected. Of the 20 executives they did pick, less than half actually completed the program. So, okay, a success rate of 0.5%. And I got through that as an A- student. It's impossible. So of the 0.5, how many graduated A-? I would guess of us, probably 3 of us did. Of the 9 that actually graduated, I think 3 probably. One guy, there's no A+. One of my buddies graduated with an A. He got A's in every class. I got A's and A- and all that kind of stuff. So anyways, impossible, but it tells me it is possible. That's it, Richard. So the secret to it is, for me, it was just keep working, never relent, get through it, you'll survive. It certainly wasn't genius. Okay, it certainly wasn't genius. So that's all. That's all. Okay, Richard, that's how you do it. If you have kids and a spouse and a job, and how do you become a Forex trader? It's very, 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 very difficult. You will be rewarded if you can do it. Yes, I have honors degree. Yes, right. The Dean's List of Academic Achievement, aka with honors. So when they announced me, right, when I'm my official degree says cum laude, I think is how you spell it, right? Forever and ever, and ever and ever and ever, even when I'm dead, at Harvard, hundreds of years from now, if you look up my records, it says with honors. It's an official title to just show that I graduated with distinction. It doesn't say, oh, and he had a job, and he had kids, and, he was a trader, and it doesn't say any of that. That goes down with me. But it says that I was a, not your average kid. Okay. Usman asks a question. Is an annual return of 8% a year good as a Forex trader? Okay. If you look at Barclays Hedge, and not Barclays Hedge. Let me get some stats here. Oh, here it is. According to Barclays Hedge, who oversees, right, hedge funds, in this case CTAs in the United States. Okay, if you get their information, it costs some money, of course. I've shared with you guys some of the statistics. Okay. I don't think you want to pay that money. But anyways, I've shown you the statistics of performance of commodities trading advisors, which are managed futures, which is a fancy way of saying basically a Forex hedge fund in the United States. And if you look at the subcomponent of the strategy, global macro, and then you could even drill down into that a little bit. But if you were a global macro managed futures commodity trading advisor in the United States, Usman says, is 8% good? You would probably be one of the best in the United States. You'd be in the top 5%. Now, Lucas says it depends. In 2020, 8% returns is nothing. In 2022, it's good. So the last time I looked, CTAs doing global macro, we're at 7% for the year. Every other, there must have been 50 other asset classes of professional traders. Every other was at break even or losing money for the year. The only one making any significant money were essentially macro traders, which would include Forex traders. The other 48 or 49 asset classes were at best break even, but many were down -10, -20%. Okay, so hopefully that answers your question, Usman. Again, not my opinion. Do you understand when I respond, it's with facts? So I hope you appreciate that. Okay, Matt. Matt says, hey, sorry if you've answered this before. Well, I'm going to end it with this way. Okay, Matt? I wrote an entire chapter in my book 17 years ago that addresses that one question. Okay, so I'll just leave it at that. I gotta go, yo. Oh my God, what a day. Ooh! Now, today's the greatest day of the week because swing traders and day traders gather together at 4 p.m. to plan next week. It's my favorite day of the week. Think about it. If you're not in our group, think about the disadvantage that you have if you're not in our group. Because we roll into Friday and Sunday and Monday already planned everything out. It's just execution that's left. And other traders, amateur traders, open their charts on Monday and they're like, what's going on, fellas? Hey, what are we doing? Are we buying the pound today? We destroy people like that. That's how we make our money. I don't feel bad about it. We deserve it. We work harder. We're more strategic. We plan harder. We know what's going on better. Okay? And I think it's in the Bible, isn't it? God helps those who help themselves. Yeah. So on Thursdays, we work our butt off. Sometimes these meetings are 4 hours long. And at the end of it, we know what's going on. And if we're right, we make money. If we're not right, we don't trade. So that's $99 a month. You're kidding me. That's it? What is that? One trade? 10 trades? Well, I mean, dude, like what? So I implore you, please join the swing trading group. Not so I can get rich, but so I can help. I think you'll notice at FX Bootcamp, it's different. I think you'll notice it's different. I think, but then again, I've never been a part of another group, so maybe it's exactly the same. I don't know. But I can tell you, it is my favorite time of the week, and the people in the group are second to none. So if you want to be a part of a community of like-minded people that are kick-ass, hardworking, serious traders that also have fun, but are like deadly serious about what they do, then that's why you join FX Bootcamp. If you want a group that is focused on getting rich quick, there's a million of them. They're probably more money. They're probably cheaper. I couldn't care less. So if you want to get rich quick, or if you want me to tell you what to do, go join some other group. Okay? But if you want seriousness with a sprinkle of fun, fxbootcamp.com. So I'll see you guys at 4. All y'all. It's going to be good. We're going to do group work today. So, peace on earth. May the pips be with you. Oh, I got my cufflinks on again for you. Isn't that pretty? I found them again. I can't find my other ones. Look at that. Bye. Bye. Pretty, huh? Cool. Huh? G'day, mate. So I'm trying to look pretty for you. You're my sweet baby. Peace on earth. May the pips be with you. May our profits be above average.